Hello everyone and welcome to the 66th episode of Kanga Crypto News, your go-to source for fast and trustworthy updates in the world of crypto. My name is Kuba and I'm bringing you the latest and most important stories. But before we proceed, please remember that all the information in Kanga Crypto News is carefully compiled by our expert Kanga analysts using reliable sources only. Please note, however, that this is not an investment advice. New episodes of Kanga Crypto News are released every week on Friday. If you want to stay informed about the most crucial developments in the crypto world, subscribe to our channel. Don't forget to hit the notification bell so you never miss an important update. And now, let's get started. The Genius Act, a major US bill regulating stablecoins, has passed both the Senate 68-30 and the House 308-122, and now awaits President Trump's signature. The bipartisan law paves the way for regulating issuers like Tether and Circle, marking a turning point after years of regulatory gridlock. It follows the House's recent passage of the Digital Asset Market Clarity Act, which targets broader crypto regulation, and now moves to the Senate. Democratic support was key to both efforts. Meanwhile, a partisan anti-CBDC Surveillance Act passed the House, but is unlikely to gain Senate support without attachment to the National Defense Authorization Act. El Salvador has partnered with Pakistan to share expertise on Bitcoin adoption and public sector crypto strategies. Pakistan's crypto minister met with President Bukele to discuss replicating El Salvador's Bitcoin reserve model, even as the IMF blocks energy subsidies for mining. Pakistan has launched a $25 billion crypto regulatory body and plans to accumulate BTC. El Salvador, unfazed by IMF warnings, holds 6,239 bitcoins worth $800 million and continues to mine bitcoins using geothermal energy. The alliance underscores a growing trend of crypto-focused cooperation outside traditional financial institutions. Traders now assign a 56.1% probability to a September Fed rate cut, spurred by political turmoil surrounding Chair Jerome Powell. Trump is reportedly considering firing Powell, while Powell may resign over an ethics probe into the Fed's $2.5 billion headquarters renovation. Powell cannot be removed without cause, but the pressure is mounting. Meanwhile, the Fed is expecting to hold rates steady in July, citing inflation from new Trump's tariffs. Markets now are focused on September for potential rate shift as CPI exceeds 2.6% targets, while labor data remains strong. Stocks linked to crypto rallied after the House passed the Genius Act and Clarity Act, signaling potential regulatory clarity. Coinbase rose 3.2%, closing above $410 and surpassing $100 billion market cap. Circle gained 0.8%, continuing a two-day 20% surge. Robinhood hit a new record at $105 and Galaxy jumped 6%. The Genius Act already passed the Senate and awaits Trump's signature. Meanwhile, crypto markets remain cautious. BlackRock has filed to enable staking for its Ethereum ETF, ETHA, which could make it the first US ETF to offer ETH yield rewards. Nasdaq submitted a matching rule change reinforcing serious intent. ETHA leads US Ethereum ETFs with $7.9 billion AUM and recently added $499 million in daily inflows. If approved, staking would allow ETHA to generate 3 to 5% annual yield, reducing Ethereum's circulating supply and boosting its deflationary appeal. Analysts see this as a transformative moment for institutional Ethereum exposure, pending the SEC's decision on staking-enabled ETFs. President Trump signed the Genius Act into law at the White House ceremony attended by top crypto executives, celebrating the first U.S. law to regulate stablecoins. The bipartisan bill passed both chambers with wide support and will now be implemented by financial regulators. Trump praised the crypto community for persevering after being mocked and counted out under prior administrations. Experts say the law sets a compliance foundation, but actual impact will depend on how firms disclose reserves and ensure consumer protection. Attention now shifts to regulatory enforcement. Jack Dorsey, Block Incorporated, will join the S&P 500 on July 23rd, replacing Hess Corp after its acquisition by Chevron. This makes Block the second crypto-related company in the index after Coinbase. Block, which provides Bitcoin payment services and runs a mining operation, holds 8.5 thousand Bitcoins, ranking 11th globally among public firms. Its stock surged over 10% in after-hours trading, now up 15% in the last month. The move may drive institutional inflows as index funds rebalance portfolios. Analysts suggest Strategy may also join the index soon. Ethereum has increased its Layer 1 gas limit to 37.3 million, with half the staked Ethereum supporting a move to 45 million. Vitalik Buterin confirmed the raise, citing improved infrastructure and client efficiency as reasons. GEF 1.16.0 now enables archive nodes to run on just 1.9 terabytes, down from 20 terabytes, boosting accessibility and decentralization. While the increase allows higher throughput, critics warn it may stress nodes. Ethereum's scaling strategy blends software upgrades with cautious capacity expansion as it advances towards the Petra roadmap. Michael Saylor's strategy plans a $500 million IPO for its STRC preferred stock, offering 5 million shares at $100 each. Proceeds will fund more Bitcoin purchases and general corporate needs. The STRC stock offers a 9% variable monthly dividend with redemption rights and a $100 liquidation preference. This follows Strategy's $739 million Bitcoin buy last week, bringing its holdings to 106,000 Bitcoins. Led by Morgan Stanley and TD Securities, the IPO could expand indirect Bitcoin exposure for institutional investors. Master shares rose 1% to $426 on the news. The SEC has approved Bitwise's conversion of its crypto index fund into an ETF, which would track a portfolio of top assets. Bitcoin 78%, Ethereum 11%, XRP 5%, and others including Solana, Cardano, and Chainlink. Coinbase Custody and BNY Mellon will manage the ETF's crypto and fiat components. Despite the approval, a regulatory stay under Rule 431E prevents the ETF from launching until further review. Analysts slam the delay as contradictory and unfair. If lifted, the ETF will offer retail and institutional investors diversified crypto exposure via national exchange. That's all for the latest Kanga Crypto news. Did you enjoy the video? Give us a thumbs up, share, and subscribe to stay updated with all the latest news. As always, stay informed and stay ahead in the blockchain world. See you next time.
We are Kanga, beyond crypto.